Good morning and welcome to the Orlando Real Estate Buzz. Thanks for joining us. I'm Brendan Rendo with the Homes Orlando team and joined as always by Joseph Dion of Apley Home Loans. Good morning.
Good morning. How are you doing, man?
I'm doing great. Before we start, just want to take a minute out because it is June 6th. And on this day in 1944, there were thousands of young men storming a couple of beaches in Europe. So to the greatest generation, thank you again. So just want to take a minute, say thank you. So a lot of interesting news, some stuff running under the radar. Biggest one is Petrodollar agreement ends on the 9th.
Wait, what is the Petrodollar agreement? Is that what we basically trade on gas with Saudi Arabia and all that other fun stuff?
Yeah, it's why we got off the gold standard.
So, wait. So the entire reason we're off the gold standard, which we've been off the gold standard for a long time,
50 years,
is expiring. And that's what's helped push the U.S. into the power that it is, the economic power that it is, because all trade from all countries for petroleum, for gas, crude oil, settles in American dollars, right?
It did. And we've seen over the past couple of years where Saudi Arabia kind of started settling with China in their currency, with other countries in their currency. But here it is. Crown Prince Mohammed said he has chosen not to renew a security agreement with the U.S. set to expire June 9th of 2024. That is the 50-year agreement that we have had with Saudi Arabia.
Okay.
But what has Saudi Arabia done lately? What have they joined?
Didn't they do? Wait, what did they do? They did something massive.
They joined the BRICS. And what's the whole purpose of BRICS? To stop the U.S. domination and get rid of the U.S. dollar as the world currency.
Yeah. So
this is just another slow death of the U.S. dollar is in the dominant position, because this is how we exported all of our inflation, because you had to trade in U.S. dollars to get your oil.
Bingo.
So it's done. It'll be interesting to see what happens to all of our military bases over there, because you think about it, if you're not going to do this, why should we continue to stay and defend you?
Well, that's a tough one. Now we start getting into world politics. But everything is like, we do everything for a reason.
Yep. Yeah.
Right?
Yeah. We agreed to defend you, provide you military safety, as long as you agreed to trade all your oil in our dollar, because we knew the benefit of it.
Yeah.
And well, if you're not going to do that, I guess I need to pull my bases out. But then it leaves that gap, that void. So who tries to step in? China, Russia?
Probably, right? Will America allow that gap to happen? I don't know. Like, that's an interesting one. That's a bigger one to see what happens with that, because I think this happening, right? Not big talking, not big news right now. I think if America pulled out those bases and pulled out of, those areas, then that would have a bigger economic impact, because it'll be oh crap, like something really has changed. Right? Because right now, even though there's no agreement, if 90% is still done in American dollars, then who cares? Yeah,
I was trying to find a resource. I couldn't find it this morning on what percentage is actually traded in U.S. dollars, and I couldn't find that. It was interesting because I know Putin when he had his interview with Tucker Carlson, had mentioned that Russia was doing, I guess it was 60-70% of their trading in U.S. dollars, and they're down to like 10% now. So again, if you got all these dollars out there and no one needs them, they've got to come home. And if they come home, what happens? Blows up inflation. So it's something to really, really watch, because I mean, I'm so surprised we haven't seen more about this in the news. I really am, because it's a major issue overall.
Mm-hmm.
So
yeah, it has a big impact, and it's going to fly under the radar. Where are we going to distract everybody to right now?
Yeah, well, we'll distract them with the unemployment numbers. Okay, let's distract them with unemployment numbers, because we just had a slight increase of 8,000.
That's
nothing major.
Yeah.
The ADP report came out, which was pretty doldrum. 152,000 jobs created according to ADP.
Expecting 175, I think, right?
Yeah. Yep.
So a little bit low, yeah.
Yeah. The JOLTS had a drop to the lowest level of job openings.
Yep.
Since 2021, down to just over 8 million.
I think I saw JOLTS also said that there was a surprisingly higher number of job quits, which kind of was a little weird, because a lot of the data doesn't point to this.
Data doesn't what?
Like, if there's less job openings, typically job quits goes down, right?
Yeah.
People can't find
well, maybe they never had jobs to begin with.
What?
Yeah, maybe they just never had jobs to begin with. Bloomberg came out yesterday and stated that many at the Fed say that the job growth was overstated by 730,000 jobs last year.
That's pretty significant. So
it is.
So I mean, 730,000 over a year. You're talking they overestimated by about 61,000 a month.
Yep.
That's
and October of last year was actually negative. It wasn't positive. It was negative.
Okay.
So when you adjust this into the numbers, our actual unemployment rate is probably about a point and a quarter minimum, so higher than it is currently stated.
And you can't say that they went on unemployment because they couldn't go on unemployment. So you fixed this error by saying that they quit.
Yeah, they quit. Yeah.
Tinfoil hats coming on. Oh gosh.
I know. We are gonna have to get a couple. I just
all right. Okay. So, but that's interesting. That's a big the Fed is, they're not known for being off on their numbers. I mean, they only revise things maybe once, and it's
they don't do it. They're not quite like the rest of the government,
But that's significant
adjustment. But then you got the White House saying it's the best economy ever. But you got the average Joe saying no, it's not.
Yeah.
And I'm taking longer. My brother fortunately found a new position, but it took him 6 months where 2 years ago it seemed like 2 days and you had 20 people calling you.
Yeah. Well, I was on another live yesterday with Jim King. You know him. Great mind. And it was funny because we were talking about all these different reports, and we talked about the JOLTS. We talked about what sectors have seen growth. And it was funny because he said, you know what, if you take someone that would go and apply for a retail service level job, let's say they apply for 10, they're probably getting called back and a start date for 8 of them. Right? If they send out 10 applications, probably start getting a job offer on 8. He said, but let's say you're a financial analyst that is making a little bit more money, like an actual important role, kind of a higher income, not an entry-level service role. You're an actual analyst, kind of this is a career level role, and you need a job, and you're applying for 100 and send out 100 applications, you're probably not getting a call back at all right now.
Yeah, it is.
And that was kind of funny because he said that, but it kind of painted the picture to what we're seeing in all these reports. The growth seems to be at all these entry-level part-time service or retail level jobs. Well, that's all that doesn't do anything. That's kind of artificial pump up. It's summer, retail and service is growing up, right?
Yep.
Like that's just it's a fluff because it's not actually an economic mover.
Yep. And I was listening to another gentleman in a similar situation yesterday where he's talking about the jolts, in that if a company puts it out in 10 different cities looking for the position, but they're only hiring in the one position, you take away and it gets hired, you just took away 10 openings the way it's done now. So the jolts number is
Isn't
somewhat
even
inflated as well. So there's a lot of things within the numbers that you got to look at. Like,
it's a good point right there. Like, I never thought about how if they post it 10 different ways or 10 different times, but it's only one job opening, that technically for all these reports counts as 10 different openings.
Yeah.
Because it's still open, but they're only looking to fill those 10 openings with one person.
With one person. You're just shopping all over the country for that one person. So interesting. Then past couple days, this has been very interesting as well. Is yesterday, the Bank of Canada.
It was expected.
It was. I mean, but their economy is horrid. I've got Canadian clients, and we think our food inflation is bad. Theirs is astronomical.
Yeah,
absolutely astronomical.
I can only imagine. I mean, Canada too. It's not affordable.
No.
I mean, it never really has. High tax rate. Their interest rates have usually been worse than ours, and they do what? Like their mortgages are 20-year notes. Is that right?
Yeah, and I think a lot of them have like adjustables, like 5 years, something like that.
Like 5-year, I think, reapply adjustments or something like this.
Yeah, something like that. Yeah, totally different mortgage market than what we have. But they're saying that they're on their target for a 2% inflation goal, so they're going to go ahead and cut their initial rate. So that's one of the G7s. That's the first of the G7 to break.
First one to quote unquote get it done. All right, let's see.
Yep, first one to break.
So the first domino falls.
Yeah.
Do we get a second domino?
Yes, we do, because this morning
that didn't take long.
Nope. Who follows the Canadians? Who uses the Canadians for their examples?
Oh, Canada.
I'm sorry, Canada, but
they're just so sweet.
I know. But this morning, Central Bank of Europe jumps in and cut their overnight rate.
Damn.
So they cut theirs to 3.75 from 4.
Okay.
Now this is what's interesting. We're sitting here at what, 5.25 right now?
Yeah.
And they're sitting at 3.75. Wouldn't you think that the people investing in dollars will look back and go, holy cow, what a spread. I'm gonna buy more dollars, and the value of the dollar would go up, correct?
You'd think maybe, right?
Yeah. This morning, dollar took a hit.
Is it possible that they're looking at it and going, maybe the American dollar is not as strong because we're not getting inflation under control?
I think that's a lot of it, and I think the other portion is.
I'm just kidding. We're getting it under control. Powell's doing an amazing job. Feds are awesome. We love you.
Yeah, it's the continued debt. Powell's got so much control, but when that debt keeps piling up, and you have to keep doing the issuance of all these bonds. I mean, we've seen the bond auctions the past couple months. They've been absolutely horrendous. They've had to drive yields up to in order to get the bonds sold. So, I think it really kind of reflects in where we're at with the 10-year Treasury today. This is you're going to have a nice day today. Sitting at 4.29, and you can see, we go to the 5, that over the past, the further we've gotten away from that auction, this is the auction. The further we've gotten away, the rates have slowly pulled back again.
Which is great. We're sitting right in, but I still think like a lot of the movement, we're not seeing these lenders move as quickly as we want them to. They're kind of being like, hey, let's see what's happening. Are we going to see bigger improvement? Are we not? What's going to happen? And realistically, like the spread that we had a week ago or 2 weeks ago between, let's say, the 10-year and MBS is actually bigger now, even
It
though the
is.
10-year has gone down. So that means that even though we've seen some improvement, we haven't seen as much improvement as we would have expected based off of where the spread between the two were 2 weeks ago.
Yeah.
It's about 8 to 9 bips worse, I believe, right now than where it was.
Yeah. I think a lot of that has to do when you look at this graph. Look at the volatility in the graph. Up, down, up, down.
And we're on a downtrend right now, but will it stay?
Will it stay?
Who knows?
What's going to come out? What news is going to come out?
And you think like I look at kind of what we had. We had JOLTS, we had ADP numbers, we had unemployment numbers. Kind of everything's pointing that maybe we're not seeing the growth that we're saying. But what comes out tomorrow? Non-farm payroll. That's the big one.
That's the big one.
That's going to be the big one that goes. Do we get confirmation, or does it come in different? And we never know with how these numbers work, because every time we have reports that should line up and mirror each other, right? Seemingly they're opposite.
When was the last time the ADP and the non-farm were even close to each other? I can't remember a time.
They haven't been, and it's so weird because they're so far off. And it's like, what are they looking at? How can the numbers be so different? But they found a way.
Yeah, I mean, huge. I mean, has ADP lost that many clients?
Maybe.
I mean, maybe that's it.
But that report tomorrow is pre-market open, 8:30. Yep. It's going to be, so we could see a wild morning. We could see nothing. We don't know.
Yep.
I have a feeling that we're going to see one way or the other. I don't think we're going to get ho-hum. I don't think we're going to get a neutral, no even keel. I think we're going to see markets respond wildly one way or the other. That's just
I think that I just got a funny feeling number comes in low. I do. I mean, my gosh, who was it? Pizza Hut filed bankruptcy this week.
Yeah.
So there's another one.
Pizza.
You're seeing more reports of layoffs. Even in Florida, there's one of the citrus companies up in Leesburg just closed its doors and laid off 137 people. So, you've seen all this, and it's like at some point it's got to hit the numbers. It's just it's got to hit those numbers. So, but when you look at it, and we look at what people are predicting the Fed's going to do, because you just had two of the G7, kind of cut their rates, right? So for June, 99.9%. It was 99.7 when we started the show. So 99.9% of people say no rate cut. Okay. None. July. This has changed a little bit. This is sitting up about 90. So we've actually seen this, people starting to think maybe just maybe there's a crack in the door opening that they may. And I think the jobs numbers tomorrow will adjust this a little bit. I thought it would adjust a little bit more based on the EU central bank cutting their rates today. I thought we'd see more of a jump, but we haven't.
No.
But then here it is, September. This is totally changed around. We were sitting about 50-50. This is rates staying the same, and this is rate cuts. So we're now up to 58% saying September will be the quarter point rate cut.
Okay.
And you got 10% thinking they're going to go a half a point.
No, I can't see that.
I can't see that unless these numbers continue to crash. I don't see that, but I can see them doing a quarter. And then November, you see a lot of people saying they're going to do another quarter. So I kind of starting to wonder if we will get that quarter point rate cut, that one rate cut this year. Just I wasn't expecting the Canadians But the Europeans, I'm kind of surprised they cut this morning.
Yeah,
Because I didn't think there was any
that
really
one
big
I didn't expect. Like Canada, I think we kind of knew it was coming. It was expected. European, I think there was questions, right?
Mm-hmm.
But I think that was the one that really caught my eye.
Yeah.
Was Europe this morning, and it does set the groundwork for everything. I've been a firm believer that I thought September would be when we'd get the first. I thought we'd get one before the election, and I feel like it's playing out now. Maybe we do get that 50 bip rate cut, so we get a big boost. Maybe.
It depends what the poll numbers are sitting at. You know how bad the poll numbers are for the incumbent.
It is the incumbent has seen a little bit of a dip in his poll numbers, which all of a sudden you've seen an increase in the likelihood of the Fed rate.
Yeah,
cut.
Yeah.
Huh.
So I mean, you're just looking at it in economically, you're kind of like, So, but this is
on the phone with
because
Powell and he's like, "Come on, dude, you just give me 50. Give me 50.
Yeah, come
50,
on,
please.
Come on. I'll get Hunter to hook you up.
Discreet drop off. You won't even know. Nobody will know it was us.
Nobody. Now this is interesting because we know all the lawsuits that are going on in real estate right now.
We're all over the place. We go world economy, home economy.
Yeah. I
now
mean,
we're going MLS. We're talking industry news now. Okay,
Yeah,
I like
yeah.
it. Let's go.
Yeah, this is interesting. This affects you and I, right directly in the pocket, day-to-day basis.
Okay.
Well, of course, we know that now, mid-August, supposedly we're gonna have to have buyer agreements, and that we can't advertise a buyer commission on the MLS.
Okay. Yep.
Okay, can't have it.
Can't have it.
But
How do you get around that? What is the way to get around that? Because let people know.
Everyone's just gonna follow the rules. No one's gonna try and get around it. Why would you try and get around it, Joe?
Absolutely.
Why? Well, the GSAs, Freddie and Fannie, have already said to us that they're not going to count if a seller gives a concession for closing costs to cover the buyer's agent's fee.
Yep.
Correct?
It won't count to the lender fee.
Will not count towards
allowables and this and that. As long as it's worded, it's going toward the buyer agent commission.
Correct. So, what did the nation's largest MLS, which is in California, say? They're going to allow listings to show seller concession.
So before you couldn't show it. Like, does any MLS allow you to display seller concessions?
No, you do not do that now.
So you can't display seller concessions. I'm assuming that's maybe an unfair. I don't know. Like you could put in like realtor remarks, like behind the scenes, like private remarks.
Yeah, behind the scenes. You could put in, hey, seller's willing to offer $3,000 towards closing costs. But you had to do it in realtor remarks. There was no field.
And realtor remarks is private. Consumers can't see that. Only agents, like industry professionals that have licenses, can do that. Okay. Yep.
Correct.
But now you're saying California, they're going to let them advertise it. Why would this need to be something that needed to be publicly advertised? I guess it never needed to be like non-public, I guess.
Mm-hmm.
Like it probably
could. Here's the question: is are they gonna show the seller concessions publicly or not? They're going to create a field that says seller concession.
Oh.
Currently, there's a buyer's commission field, correct?
Okay.
2.5%, 3%, whatever it may be, right? There's no field in there, seller concession. But now we're going to take away that buyer agent commission field. That's
California
wrong.
was like, look, we already have the program. It's already coded. We're just going to change it from buyer agency committee.
That's all they're going to do.
We're just going to reword it to seller.
We're going to reword
it. Programming, it takes 2 seconds. It's easier to just change the field than to eliminate the
easiest one to
field.
do. That's it right there. That's super easy.
It's going to be right next to listing agent commission. I'm sorry.
Yeah. So why bother changing it? Why? Because you had some money hungry lawyers who saw a group, the most powerful group, lobbying group with big pockets, and said, let's sue them and let's make some money.
Let's make some money. They're the only ones that made the money.
They're the only ones who made money. Yeah, because I think it's was $19, $29, something like that the buyers will get, something like that, or the sellers.
How much? $29?
It's like $29.
I like it. I like it.
$29. So it's like you say. I read this and I'm just like, oh, nothing's changing. Nothing is going to change. The seller is still going to do it. And it makes sense. It's worked well for what, 50, 100 years, something like that.
Mm-hmm.
Leave it alone.
Yeah.
Leave it alone. Let it work. And this thing is, oh, we didn't know. It's like then read your contract before you sign it. I mean, you explain it to everyone. Is hey, would you agree to a 5% commission, and I'll provide half of that to the buyer's agent for bringing the buyer. You know what they can say, Joe? You know what they can say? No. They can say no. I'm only willing to do 4. But I just had them in that arm bar, had it up behind their back.
I forced them.
Forced them to sign that document. Forced them. Oh, this world is crazy these days.
I think, you know what, I did feel, yeah. I was forced to pay that buyer agent commission. It was brutal. My neck still hurts from that one.
Yeah, I heard your agent was a pain in the ass.
That's the attorney. How much did the attorneys make? Like, wasn't it like $550 million or something like that?
Some absolutely phenomenal number.
Like, I love it.
Yep. Yeah, it's an absolutely phenomenal number.
Those Saints too, like they tried with all the risk in this case. They chose to try this case and really protect the common folk.
Yeah,
really protect the common folk from being taken advantage of. I'm just so thankful that they were the true saints in this.
Oh yes, they were.
Without them, we would not see the change that we needed, which was apparently changing buyer agent commission offered to seller concession being offered. That change was worth every bit of that $1.78 billion fee.
Something I couldn't even fathom it. It's like, whatever.
Yeah.
And what gets me though is the association just folded. They just, just folded. So
I mean,
it's not just us.
They're
coming after you too.
Yeah, they're coming after us now. So CFPB inquiry into junk fees and closing costs, because closing costs are up for consumers. Shock. Home values are at their highest price and closing costs have gone up. Inflation has been absolutely crazy and costs for goods and services have gone up. It's just the darndest thing. Like, we really need to control this, and we need to take another look at those fees that lenders are charging, because I know we told lenders that they had to do this before, and we created all the rules and requirements that they have to abide by, damn those lenders for charging those fees and passing it along to the consumer and trying to actually be able to make a profit. I don't know. But it is interesting because they are looking at some different aspects. They want to see, is it like, are the lenders being taken advantage of in some of this, because they don't have the ability to shop. So they may, I don't know, maybe like originally it was just targeting the lenders. Now it's kind of saying, well, maybe the lenders aren't the problem. It's the providers that the lenders have to use, such as credit companies. And why has credit gone up and gone from, because credit, like 10 years ago, you used to be able to get a credit tri-merge like $10, $12.
Yeah. Yeah. It was, I remember. Yeah. It was cheap.
I mean,
What is it now? Like 90?
90, 100, 150 for some providers. Like there's a lot of different cost and pieces and weight and everything. There's a cost for everything, right? Like
Yeah.
you need a supplement. And these are all things you need. Like if a mortgage on a credit report wasn't updated, is 2 months old, you need a supplement to show that it's still current. Like that costs money. Like there's all these things that cost money. And it's a cost of doing business. But when margins are compressed and numbers are tightened and everything else is tightened, like there's no room for lenders to absorb that cost.
Yep.
Right? So they have to pass that cost to the consumer because we still have to, quote unquote, pay all the employees that is required and we need to be able to get these processes to closing.
Yep.
Oh, well, we'll see what comes of it.
Yep.
I'm pretty sure they'll be like, you know what? We're dropping. Lenders they're going to put caps. I think they're going to start putting tighter caps. And they're going to do it in a manner that they think it's going to change how providers operate. But what it's going to really probably do is just squeeze the lender themselves even more, which means the lender's going to do what? They're going to have to charge higher interest rates.
Right.
So that they can be profitable in another area.
Yeah, because price setting has always worked so well.
Mm-hmm. Yep. I like it.
Yeah,
I think it's not going to help me much, but
Yeah. Well, before we get into the Orlando
what is
numbers,
this? Close that article.
This came out this morning from Orlando Business Journal, and Orlando is, and we kind of went over this last week about talking about how homes are overpriced, and this came out that Orlando is among the metros with the most overvalued homes. And why are they saying this? They're saying it because the median price for Orlando Metro home is $372,806.
Okay.
But the buying power is only $336,000.
Okay.
So there is a gap.
Yeah, that's a big gap too.
It's a big gap. So it's 11% higher, which is funny because that was kind of the number we were talking about last week, is we felt we're probably about 10% overvalued in this market, that we possibly could see that type of correction in the market. So we're pretty good on our numbers. So you're looking at this and you're kind of understanding why inventory has started to grow. So when we get into the numbers for the week, actually it was a fairly good week, which you kind of expect. Okay. We jumped to 530 sales, up from 480. That's a nice little jump. Value went up a little bit, 450, but our inventory is still continuing to increase.
Okay, so even though we saw an uptick in closings, we saw a bigger uptick in inventory.
Correct. Yep. And I was doing some of my zip code reports last evening that I do on a monthly basis, and a lot of these zip codes within Orlando are having 100% or better increase in inventory from 12 months ago. So it's being backed up by the individual areas of Orlando as well.
Okay.
Our condos, they flattened back down to 123. But this was interesting. The inventory decreased by 19. Not because of sales.
Not because of sales. They're taking units off the market.
You got it. Yep. Months of inventory, we actually dropped below 3.
Okay.
Which
were we sitting at over 5, like 5-6 months in that 500K and up a while ago?
Yeah.
Just a short time ago?
Just a short time ago. So we're seeing some of these start to pull off the market.
Okay.
Active is about the same though, which is interesting. So, but it just means the number of units is selling quicker.
Yep.
This was interesting because our original list to sales price actually dropped about a little over percentage. We were up to about 96 last week, and we pulled back to 94.5.
So we're seeing sellers have to be a little bit more aggressive in what they're willing to do. Okay.
Exactly.
Maybe a little bit of that fear of market change.
Yep. So you see graphically, and you expect this in the spring. We're starting to do an uptick. I would love to see this break the 600 mark. I would
And
love
stay
to
above
see
it. But
I don't think it will. But if we can stay above 500 through the summer,
that'd be good.
Let's
stay above 550. Let's go 550. Let's get to 550.
I'll live with 550. I will live with 550. Then again, our inventory just steady as she goes, continuing to go up. And again, this is a lot of people. It's that time of year, but also just people hitting that point where I've got to sell. It's time. I've got to move.
Yeah.
Then we hop into the condo market. You see, we're sitting pretty flat, right at that 6 months of inventory, and they're at the same place. 94.6% original list, but it's the list price. But that's even with list price coming down. We've seen a huge drop in the list, and you're 61 days on market. So, as a buyer, this is a complete buyer's market right now. I know I've got a couple offers we're going to try and put in today, and we're going in aggressive. We're going in extremely aggressive because one of them's been sitting for, I want to say 129 days, I think is what it is, something like that. So we're doing 20% down. Let's go for it. Yeah. Then you see, took a nice boost down in sales.
Yep.
And then our inventory decrease. We're still up nearly 30% since the beginning of the year, which is a huge jump. But this is the reason why. Withdrawn. Look at the jump and withdrawn. Went from 56 to 74. That's pretty much your entire difference on the inventory. So this number of withdrawn has consistently stayed high since the end of March. So people just don't want to wait anymore. They've had their property on the market, so what are they going to do? They're going to pull it back off and try and possibly rent the property.
Yeah, maybe they kind of sat on it a little bit, tried to sell it. And now they're like, okay, well, we can't get rid of it, so let's see if we can rent it and at least break even. Or even take a small loss, see if the market adjusts a little bit, right?
So those are our numbers. That's what's going on in the world this week. Thank you again, Joe, for joining us as always. Please like, subscribe, and join us every Thursday. Take care. Have a great day.
Boop.